Hey everybody, it's your hospitality friend Glenn here from the Lodging Conference. Thanks to our sponsor, Unifocus. Streamline your hotel operations, unifocus.com. Ryan, Bosch, Arriba Capital. Ryan, great to see you, man.
Likewise.
All right, so, presidential elections coming up, so I've been telling people for months, there's always a rate interest cut before the elections.
Yeah.
That has materialized a half a point, more than people expected,
Right.
less than people wanted. Where are we with how this interest rate is affecting your job and hotel development?
Yeah. Look, I'd say move in the right direction, right? Is it going to be a paradigm shift where the market's going to start transacting? Well, no, I don't think 50 basis points is enough. But I think now everyone knows we're going in the right direction, so we're starting to see deal activity pick up. But I think we need probably another 50 basis points to shave off, which we're expecting by the end of the year for the market to really pick up.
Okay, so Bruce Ford at Lodging Econometrics on day one of this section said in Q2 2024, 2024, the highest ever in the new construction pipeline. That represents properties currently under construction, those in pre-planning and early planning as well. What percentage of these properties are actually going to, you think, build based on this interest rate change and maybe just general market conditions in general? And I understand we're not talking about specific properties, so it's just a generalization.
Yeah, look, on the there's a ton of properties in the pipeline, as everybody knows. The problem has been no one's really breaking ground, right?
Right.
I think that's going to shift going into next year. I think we're going to see a big increase in velocity as interest rates go down. Deals are going to start penciling, and we're going to see people start putting shovels through.
All right, so here's something I'm just thinking of. If things start penciling out and everyone goes in at the same time to start building, how will that affect the actual construction costs and the money you need to lay out? Because if everyone's building at once, there's only so many people that could build these at once.
Look, hotel development financing is always a tough bucket of capital. So it's going to go to the most experienced developers in the best markets. And I think it's going to be very market-driven, right? If you look at where we're at today, RevPAR growth is going to be flat over the next couple of years. Operating expenses are increasing, but that's on a macro level. If you start peeling that back and looking at some submarkets, markets like Seattle, markets like Houston, where we're going to see outsized RevPAR growth compared nationally, I think you're going to see a lot of development deals in those markets.
Are there any particular segments that it's more appealing to folks like you to be able to deploy that capital?
Yeah, I think for us right now, we're working on a lot of stuff in upper upscale luxury segments. We're seeing ADR growth there be stickier, where we're kind of seeing a retreat in the economy side right now. So I think we're going to see a lot of capital deployed in upscale property.
All right, I'm looking at a cabana at the Houseman Resort Pool Club and Smokehouse. What do I have to do to get financing?
Reach out to me, Ryan at arribacapital.com. Find us on LinkedIn. Happy to connect.
All right, he's happy to connect with me. I'll never get financing for it, but you might do it.
We don't do cabanas.
Damn it.
Do cabanas.
All right, thanks everybody for watching. That's Ryan. I'm Glenn. Check out unifocus.com. Subscribe to our newsletter. Text the word hotel to 66866. Thanks and goodbye.